Real Estate Without the Fluff, What Actually Works in Sales, Marketing, and Investing, 2026 panel. In real estate, everyone faces the same problem. Too much fluff. Too many gurus. Not enough real operators sharing real results. In 2026, Radio Arya is changing that. This video is one of series where we bring together real producers, real investors, and real experts to talk about what is actually working right now. Hosted by Iraj, mortgage agent and real estate broker. This is a platform built for agents who want real answers, investors who value clarity, professionals tired of hype, anyone serious about long-term success.
You know, the Canadian housing market was supposed to be absolutely on fire in 2025. I mean, that was the story, right? But instead, it's been more of a slow burn. After all that hype about a massive rebound, the year kicked off with a major reality check that left a lot of us asking, what is really going on?
So yeah, that's the million-dollar question, isn't it? It's on the mind of pretty much everyone, from first-time buyers who are glued to mortgage rate news to investors trying to figure out their next move. What happened to that big recovery we were all told to expect? Did it just vanish into thin air? Or is there a much bigger, more complex story playing out behind the scenes?
And this quote right here from the Canadian Real Estate Association. Well, it's basically the key to the whole puzzle. The recovery isn't canceled, folks. It's just on a different schedule. The two words you really need to focus on are delayed and dampened. So let's dig into why the script got flipped.
Okay, so to really get a handle on where we are right now, we've got to rewind the clock to the start of the year. We need to look at what the original plan for 2025 was supposed to look like, and then pinpoint exactly where things took a pretty sharp, unexpected turn.
The year began with a huge plot twist. Just when the market was supposed to be cranking up the heat, all this talk about potential U.S. trade tariffs and a shaky global economy sent a real chill through the air. And what happened? A lot of would-be buyers just decided to hit the pause button and wait it out on the sidelines.
I mean, the contrast here is pretty stark. The forecast was calling for a booming market, with sales soaring past 500,000 homes. But the reality? It was a market on hold. And this was especially true in hotspots like British Columbia and Ontario, where prices actually started to feel some downward pressure for a change.
So, what's really behind this delay? Well, you can think of it like a giant tug of war. There are three powerful, competing forces, and each one is pulling the market in a totally different direction. Let's break them down, one by one.
First up, we've got that lingering shadow of economic uncertainty, especially with those potential U.S. trade tariffs. It's like a storm cloud just sitting on the horizon, and it makes everyone a little bit nervous, right? Businesses get hesitant, and potential homebuyers start thinking twice, maybe 3 times, before making what is probably the biggest purchase of their lives.
Now, the second force. This one is a real game changer. We're talking about a major shift in the federal government's immigration policy. And this isn't just some minor tweak, you know? This is a fundamental change that's set to create some serious ripples across the entire housing market, from buying all the way to renting. And just to give you a sense of the scale here, we're talking about a planned reduction of 900,000 non-permanent residents. That's a huge number, and it's going to directly pump the brakes on the growth in housing demand, especially in the rental market, which, as we all know, has been stretched to its absolute limit.
And the third force is the one that so many people have been waiting for: falling interest rates. After what felt like forever, rate cuts are finally here. For all those buyers who've been stuck at a red light for the past couple of years, this is the green light they've been desperate for, and they are ready to jump back in.
Okay, so you've got these three big forces: caution from the economy, a huge policy shift, and the lure of cheaper borrowing, all pulling and pushing at the same time. So, what does the future actually hold? Let's take a look at the new national forecast and see what the experts are predicting now. Here are the updated numbers from both CRE and CMHC, and they really tell a clear story. 2025 is looking a lot softer than anyone thought, but that strong rebound is now getting pushed into 2026. Just look at the jump in both sales and prices projected for that year. In a way, 2026 is the new 2025.
And you can see that story perfectly right here in this chart. See that slight dip in sales for 2025? It falls just a little bit below 2024 levels. But then, boom, a really strong comeback in 2026, pushing sales well over that 500,000 mark. This visualizes that delayed, not derailed theme perfectly. But look, this story isn't just about homeowners. That huge policy shift on immigration we were just talking about, it's going to have a massive, and I'd argue a more immediate, impact on renters all across the country. So, what's the deal for them? It really sets off a clear chain reaction. It starts with fewer newcomers, which means less pressure and competition for rental units. That, in turn, leads to higher vacancy rates, something we haven't seen in years. And the so what for renters? Well, it all points to a much-needed slowdown in those crazy fast rent hikes that we've all been dealing with.
So what we're seeing is a bit of a rebalancing in the market, right? A delayed rebound for buyers and some potential relief on the horizon for renters. But does any of this actually solve the single biggest issue of all, affordability?
This is the question that keeps so many of us up at night. Are these market shifts, a different sales timeline, slower rent growth, actually going to make it fundamentally easier for the average Canadian to find a place they can afford to call home, for the long haul?
And here it is, the hard truth, coming straight from RBC Economics. These changes, as significant as they are, just won't be enough by themselves to fix Canada's deep-rooted affordability crisis. And that leaves us with the most important question of all. If this isn't the final answer, what is?
Thank you for spending your time with us today. We truly appreciate you being part of the Radio Arya community. If this conversation brought you clarity, value, or a new perspective, please support the channel by liking this video, subscribing to Radio Arya, leaving a comment with your thoughts or questions. Your engagement helps us bring more real operators, real experts, and real conversations to the screen. In our next videos, we'll continue breaking down what's actually working in real estate, investing, business, and financial decision-making, without the noise, without the hype. Until next time, stay informed, stay grounded, and we'll see you in the next episode of Radio Arya. Disclaimer: this content is provided for educational and informational purposes only. It is not intended for commercial use, and it should not be considered legal, financial, mortgage, or investment advice. Every individual situation is different, and outcomes may vary based on personal, financial, and legal circumstances. Before taking any action based on the information shared in this video, viewers are strongly encouraged to consult with their licensed professionals, including a licensed mortgage agent or broker, a licensed real estate professional, a qualified lawyer or legal advisor. The creators of this content assume no responsibility for decisions made based on this material.